And E is establishment and G is profit. So profit and establishment. Establishment means cost of establishment, as I said, my infrastructure cost, office cost, space cost, salary, wages, etc. Whatever it may be, salaries mainly. So in that case, maybe rent, electricity, telephone, various other expenses, office expenses. So these are to be deducted, now mind you, to the extent of supply of labor. And G also to the extent of supply of labor. That we have to keep in mind, that these are the two items, one is establishment and one is profit. This would be not deducted in whole, but it would be deducted only proportionate to the value of labor and services. Why? For this, friends, we need to look at, let us look at this standard cost sheet. A standard cost sheet where suppose the total contract value, that is contractual transfer price, is rupees 1000, the bottom line. This 1000 consists of how? Materials 400, labor and services 362, and overhead 49 and profit 189, both taken together 238. So total comes to 1000 rupees. Suppose this is a standard cost sheet of a particular works contract. If that be so, I am trying to show you three components, because in any contract there would be material, there would be labor and services, and there would be overhead plus profit. So mind you, material, that is the property in which is transferred. Labor or services means all other costs of execution, as I said, that is A, B, C, D and F, all taken together. And then overhead and profit, that is E and G. These are the two items. So I have just tried to correlate these items with the earlier provision slide, as I told you. Rule 30 sub rule 2, rule 30 deductions under section 18 to be A, B, C, D, E, F, G. So A, B, C, D and F, these are the costs of execution. So I have shown here under labor and services. And E, that is establishment, and G is profit. These two I have taken at the bottom. 49 plus 189, total 238. So this total works out to 1000. Now I have depicted it in a different manner. Now friends, contractual transfer price rupees 1000. Out of that, material portion, because this will invariably have these two limbs, the left one and the right one. Left one is material limb and the right one is labor and services limb. Now mind you, the left one, that is the material limb, liable to VAT, and the right one, that is labor and services limb, that is liable to service tax. So this is the service component, that one is the material component. And the middle one is a middle component, middle limb, which consists of cost of establishment and similar expenses plus profit, as I said. So cost of establishment, I took the figure 49, and profit I took the figure 189, like from the last slide I have taken this. So these two taken together, as I showed you earlier, this is 238. So 400 is the material cost which is directly liable to VAT, and 362 is the cost of labor and services, that is also directly liable to service tax. But the concern is from cost of establishment and profit. Now mind you, since this is a composite contract, this is a pregnant contract consisting of both supply of material as well as supply of labor and services. Supply of material is a taxable event for VAT, supply of labor and services is another taxable event for service tax, another statute. So the cost of establishment plus profit, as if we have two different activities, one is sale of material which is liable to VAT, and the other is providing services which is liable to service tax. So we have two separate activities, but pregnant one single contract, one composite contract. So this cost of establishment plus profit also attributable to both these activities, and once this is attributable to both these activities, so it has to be allocated proportionately on a rational basis to the material as well as to the services. So both these activities, it has to be allocated. So accordingly what I have done is rupees 238 is the total cost of establishment plus profit. This is to be allocated between material and labor. So material 400 and labor and services 362, these are the cost element, and profit is attributable proportionately. So proportionately I have added one portion to material and the other portion to services. So finally what comes out or works out here is 525 is the value of material, the property in which is transferred. Now mind you, 400 is the cost of material, but the value of material property in which is transferred for the purpose of VAT or sales tax is 525. That means 125 comes from 238 on proportionate basis. From 238 on proportionate basis, 125 comes to the material link, and the balance 475, that means the 113 comes to the service link. So accordingly that works out to 475. So that means this is the sale price of goods for 525 and sale price of my services 475. This is what it is actually. Total comes to again 1000 rupees. So
Service tax will be paid on 475?
Now service tax will be paid or payable on 475 of course, which you must have already discussed, and VAT would be payable on 525. Now this is an ideal situation, this is an ideal calculation of VAT and service tax from a works contract. A works contract which consists of total 1000, so naturally one portion if attributable to VAT, the other portion would be attributable to services. And accordingly, if you look at the definition of taxable service, that also says, provides in respect of works contract that the service portion in execution of a works contract. So therefore it has to be, if 525 for material, then only the balance 475 for services. Now practically what happens, friends, is if you, why I told you that these are the three slides I will try to more concentrate upon, or I would like you also to concentrate upon, is what happens is when you go for VAT assessment and when you go for service tax assessment. Now VAT assessment, the VAT authorities would say that the value of material is not 525 but it would be 625. They would always have a tendency to say that it's not 525, it would be 625. Why I have come to that? And similarly, when you go for service tax assessment, the service tax authorities would say that your service element is not 475 but it is 575. So service authorities say, service tax authorities would say it would be 575, and VAT authorities would say, let's say it is 625. So 625 plus 575 total comes to 1200. But my total value is 1000 rupees. Now why this happens, and for which you must have this first session of GST, a major factor is to eliminate these cases of overlapping issues, because we now have many overlapping issues, many transactions on which both VAT as well as service tax are being paid. We are also landing up paying both VAT as well as service tax in respect of many works contracts. I would say almost 100% of the works contracts. Either you go by on actual basis valuation or you go by presumptive taxation, that is formula for VAT as well as formula for service tax also. Mr. Madhukar has already told you under Rule 2A, 40%, 70% as the case may be. So if you go by that presumptive taxation, there also may be service tax people saying that 40% in case of original works, 40% would be the service portion, and VAT authorities under presumptive taxation would say that 75% is the material portion. So 75 plus 40 adds up to 115. That means to the extent of 15% of the total contract value there is an overlapping. You are paying both VAT as well as service tax. Similarly, if you go on actual basis also whatever valuation you do, I am quite sure that the VAT authorities would finally enhance it to some extent. And they would say that it's not 525, at least 625, they would have a tendency, and finally maybe you can settle at somewhere maybe at 575. So 50%. And similarly for service tax also, instead of 475, they would go to up to, let's say, 525. So that means to the extent of 100, that means to the extent of 10%, there is invariably an overlapping. So this is what happens. Now why this happens? Under VAT, if you come back to the earlier slide, as I said, or rather one earlier, Rule 30, sub-rule, section 18(2)(b), this Rule 30, A, B, C, D, E, F, G. Now mind you, this A is execution, B is planning, C is tools on hire, D is consumables, E is establishment, similar other items and profit. Now if you look at these, as I said, A, B, C, D and F, all these 5 items are costs of execution. So since these are costs of execution, so straightway these would be allowed or to be deducted in full. This is what is ideally should be. But the department would have a view, they would always tell you that no, this similar other expenses, or for that matter the, let's say for the particularly similar other items, that is something which is directly related to or attributable to execution, they would say okay, you get the deduction in full. But say there are some other costs of execution which is not direct to a particular site but indirect, but still that is directly for execution, but maybe not related to one particular site, maybe related to more than one sites. But the department would have a tendency to tell you that no, I will not allow you deduction in full, you can get this only on proportionate basis. Irrespective of this very clear provision, why I try to depict these provisions in this manner, to show you that the clear idea is that total cost of execution to be deducted, direct cost of execution, and any common cost that is to be only on proportionate. But what they would say is that establishment cost I would not allow you any deduction, and various other items like say tools on hire, here it is said that tools on hire. Suppose you have not taken a tool on hire, but rather you have purchased a tool. Now that tool is to be used for execution of various sites, construction activities, and maybe for many years, more than one. So suppose you are using it for 5 years or 7 years or 10 years and in different sites. So naturally the depreciation which you are claiming under income tax or under Companies Act, as the case may be, so that is also cost of that tool, where the property is not transferred. but this is entirely for execution or related to execution of works contract. So when it is taken specifically to say that tools on hire, then of course if instead of hiring, if I have purchased it, the depreciation also should be allowed in full. But they would say no, depreciation would not be allowed in full, depreciation would be allowed only proportionately. So these are the items where they take these particular interpretation, they make these particular interpretations, and accordingly they disallow to some extent your various costs. Where it is proportionately to be allowed, they would say it is not allowed in full and at all, and where it is to be allowed in full, they would say that no, it would be allowed only proportionately. So this is how they would try to decrease your deductions and accordingly enhance the value for the purpose of VAT. And similarly, when you go for service tax, they would also have a tendency to say, like say, that consumables, of course we know that consumables should be included in the value of services. But there are certain other items which are not consumables, but again they might have to tendency to say that no, on this value also you have to pay service tax. So this way, while valuation, there is some problem regarding valuation in respect of these particular items, where these items, item-wise or specific item-wise in these rules, we have to take care and accordingly find out which one is directly for the purpose of execution and which one is common to both material activity as well as service activity. Yes.
As this discretionary assessment of taxable component of material and taxable component of service is legally tenable? Is it acceptable in court of law?
Yes, absolutely. That is what the provision, that is what I am trying to show you, that the section and the rules, this is precisely what is provided for in the statute.
So combined together it can be more than 100%.
It cannot be. That is what I am saying. It cannot be more than 100.
But they are
yes. Why this happens? Because the central excise authorities, they would say that we are not bothered about what is provided for in VAT or what you are doing for VAT. You come to me and I do the valuation independently. Similarly, when you go to the VAT authorities, they would say that I am not bothered about what you have offered for service tax. You come to me and I will do the valuation on my own.
Isn't it unjust enrichment for the government of India?
Government, see, that is absolutely a different issue. Unjust enrichment for government of India, that is absolutely that is a very, very contentious issue.
The cost of taxpayer.
Correct, but that is what we are suffering. You see, on restaurant services, on hotel service, many other, as I told you, maybe during the course of discussion on GST, you might have come across these issues. So double taxes and overlapping are there. Invariably it is there. And especially in respect of restaurant, 5, 6 high courts, different high courts taking different views on restaurant services, whether there is at all any service element, whether at all service tax can be imposed. Kerala High Court repeatedly saying that no, service tax cannot be imposed, the full value has to be charged to VAT. Mumbai High Court directly in conflict with Kerala High Court saying that no, service tax is a legitimate tax and it can be levied on the service element and VAT can be imposed only on the material portion. Chhattisgarh and Uttarakhand are taking a different view.
No any finality of interpretation?
That finality can be reached only when it goes to Supreme Court, and you must have already had this discussion on Pune Elevators case. This Pune Elevators case, actually it was decided by the Supreme Court 3 members bench in 2005. I will come to that as well, in fact a little later, where just one liner, that in 2005 Supreme Court in case of Pune Elevators said that this particular contract is a contract of sale. And now in 2014, Supreme Court again, larger bench, 5 members bench, by in the decision by majority 4:1, it is decided that no, it is a case of works contract. So Supreme Court has changed its verdict after 9 years. So that also happens. But this issue so far has not been settled, like this overlapping of VAT and services. Yes, it is not settled, but this has come for examination in different cases as well. So, but precisely what I am trying to specify here is that the provision very clearly says or provides for that only the material limit can be charged to VAT and only service portion limit can be charged to service tax, and the common items are to be attributed between material and labor. So this principle itself is very clear that together, both these together can constitute only 1000, that is 100% and not more than that. Under presumptive taxation, of course, that is allowed. Supreme Court has said time and again that when you go for presumptive is an alternative when you are not in a position to provide figures or numbers on actual basis. And in that situation, presumptive taxation is allowed, and therefore presumptive taxation, if you go by presumptive taxation, even if you end up paying some excess tax for that matter, valuation is more, that is justifiable. But when you go on actual basis, then of course this overlapping should not be there. But since we have federal structure, we have central government, we have state government, we have central taxes department, that is service tax of central excise and state taxes department, both are independent, and we do not have a mechanism of synchronization between these two. We do not have any mechanism to redress these issues. The only mechanism could be, of course, is High Court. If you go to High Court and file a writ, under writ jurisdiction, a High Court can decide that no, these two overlapping cannot be there. So that from time to time, some people, some assesses go to High Court, and out of them, some are only admitted and finally it is examined, whatever it may be. So this is there. This is our real life situation.
Sir,
Please.
sir, on actual deduction, what will be the rate?
Actual?
When we go for the actual work contracts, for
Actual basis, valuation on actual basis.
and then what would be the rate?
Rate is not related to the valuation. Rate, you see, rate, it is not the scheduled rate. The rates applicable would be for labor and services, no tax. For the out of the material portion, the declared goods portion liable at the rate of 4% or 5% as the case may be, because presently it is 5%, earlier it was 4%, and all other goods under West Bengal, all other goods liable at the rate of 14.5%, earlier 12.5, then 13.5, and now 14.5. But this is, mind you, not uniform all over the country. Different states have different provisions, and most of the states also, in respect of works contract, provide for taxation of VAT as per the scheduled rates. Now mind you take a simple example. Suppose you are executing any infrastructure project. Suppose you are undertaking construction of a road, or construction of an airport, or construction of a port, or construction of railways. If you are undertaking this contract in West Bengal, what you are doing is you are paying 14.5% on the materials other than declared goods. Suppose if I presume that 70% is the total material, out of which let's say 25% is the declared goods, or say 30% is the declared goods, that means 40% is the other than declared goods. So on 40%, if the same contract you are executing in other state, you are paying at the scheduled rate, which may be 5% or 14.5% as the case may be, but in West Bengal, you are invariably paying at 14.5. That means 8.5%, there is a difference of 8.5% or rather 9.5%. So even if to the extent of 30%, 9.5%, that means approximately 3%. So you are landing up paying 3% excess tax on the gross contract value, if the same contract executed in West Bengal compared to some other state. So any infrastructure project taken up in West Bengal is approximately 2, let's say 3% costlier than any other states, only because of this tax element.
But we can take the credit, but we can take the VAT credit. On
VAT credit in any case is available. On purchases you are paid at the scheduled rate, so that credit in entirety is available. Now your output tax is straightway going up by 3%. So straightway this total contract value in respect of any infrastructure project is going up by 2.5 to 3%. That is what the West Bengal VAT provides for. Now friends, after this, as I said, I would come to just because I was told, of course, 45 minutes, that is already over, but if I can take another 5-10 minutes. It's a very important judgment, friends. That is the issue here was like Supreme Court in case of Pony elevators I was talking about. Friends, very often we come across cases where a contract, whether it is a contract for sale of goods or whether it is a works contract, that becomes an issue in debate, in dispute. Suppose here the case was like in case of K. Raheja and Larsen & Toubro, which we have already discussed in respect of builders. He is undertaking construction of a building. So on behalf of prospective buyers, so whether it would be a works contract or not, but I am talking about Pony elevators, where the issue was the contractor has undertaken a contract for manufacture, supply and installation of a lift in a building. Now lift in a building means you are constructing a building, you have given a contract to Pony elevators. Pony elevators, for that matter, there are various components of a lift. Let's say the components are lift car, that car, then motor, then rope, then rails. These are the various components of a lift. And then installation would require technical aspects, then norms for installation of that lift, then various parameters that we made, various skills are required, various experience is required to install that lift. So these are the components of services. Now these components of materials, the contractor is supplying, they are undertaking the installation, and finally the lift becomes operational. And that lift becomes operational in the building, and since there was another issue whether it would be amount to manufacture or not, for that matter whether it would be liable to central excise duty or not, this issue has also been examined by the Supreme Court in a number of cases earlier. And Supreme Court has said that when this lift is installed in the building, it becomes a part and parcel of the building, which is an immovable property, and therefore it would not be chargeable to central excise duty. But if you are selling straight away a ready-made lift or escalator, then it may be manufacturer and chargeable to central excise duty. So that is a different issue. Now I am coming to this Pune elevators case where this was the contract, that installation of a lift, and then whether it would be treated as a contract for sale or it would be treated as a works contract. This was the issue, and it came before Supreme Court. So way back in 2005, this issue came before the Supreme Court, and Supreme Court said that it is a contract for sale and not a works contract. Why it is a contract for sale? There they said that the principles which were the deciding factors were, there are three different types of tests. One is dominant nature test, or overwhelming component test, or the degree of labor and supply test, services test. That was basically dominant nature test I am talking about. What is the dominant nature of the transaction? The dominant nature of the transaction is there, the Supreme Court said that the dominant nature of the transaction is supply of a lift. The builders were interested in a lift. Now how the lift is to be installed for that matter, so it was argued that the lift, installation of that lift or erection of that lift, that is a part and parcel of the activity of the supplier. The builder is in any case interested in lift, so they want a supply of lift. So therefore it is a contract for sale. This was the decision or final verdict from the Supreme Court in case of Pune elevators in 2005. But this issue came up before Supreme Court again. It was referred to a larger bench of Supreme Court, 5 members bench. There they have given a very detailed judgment on this particular case, and they reviewed, and finally they said that no, the principles laid down by Supreme Court by the lower bench in 2005 was not a correct law. That was not a correct law enunciated. Actually it would be treated as a works contract. It would not be treated as a contract for sale. Why? The principle here is, friends, we have to mind that so far, and for that, while giving this decision, the Supreme Court examined, or rather they referred to all other earlier landmark judgments starting from 1958 in case of Gannon-Dunkerley. That is why I initially referred to the Gannon-Dunkerley in 1958, then Delhi Industrial, then K. Raheja in 2005, and then Larsen and Toubro in 2013. So Supreme Court in this case said, in case of this Pune elevators, they followed the Supreme Court judgment in case of Larsen and Toubro delivered in 2013. And Larsen and Toubro in 2013 was delivered following the judgment of Supreme Court in case of K. Raheja in 2005. So finally, referring to this K. Raheja in 2005 and Larsen and Toubro in 2013, in 2014 Supreme Court said that the law enunciated in the K. Raheja and Larsen and Toubro is the correct law, and the law enunciated by the Supreme Court in Pune elevators in 2005 was not the correct law. Why it was not the correct law? They said the main issue was, the crux of the issue was that they said that this dominant nature test, which has so far been applied by the various courts in different cases, is not the correct law. Now Supreme Court has debated, because they examined the change or the amendment in the Constitution, Article 366, Clause 29, capital A, which was inserted in 1983. Based on that insertion, they examined this whole issue, starting the entire history of works contract, starting from, and in this case, various states were involved. State of Karnataka, state of Maharashtra, state of Tamil Nadu, state of Andhra Pradesh, state of Odisha, state of Haryana, state of all these, Rajasthan, all these states were involved. And all these cases were taken together, examined by the Supreme Court, and finally this verdict was given, and they relied on various other Supreme Court judgments which were rendered earlier, starting from State of Madras versus Gannon-Dunkerley in 1958, then 1961 Carl Steel GmbH versus State of Bihar, then Patnaik and Company, then State of Gujarat versus Kailash Engineering Company 1967, then State of Madras versus Richardson and Trudell in 1968, then Man Industrial Corporation. So various judgments were there. All these were examined, and finally they said that no, the situation has changed. So far, the decision was taken based on this dominant nature test. That what is the dominant nature of the transaction? Whether the dominant nature is a sale of goods or it is the dominant nature is execution of a contract. If the dominant nature of a transaction is sale of a particular goods, then it would be treated as a contract for sale. And if the dominant nature of a transaction or a contract is execution of a contract, then it would be treated as a works contract. This was the principle followed by the Supreme Court or laid down by the Supreme Court so far earlier. But now, starting from K. Raheja in 2005 and then Larsen and Toubro in 2013 and then Pune elevators in 2014, now they say that no, this dominant nature test is no more valid. It is not a valid test. What is valid test then? They say that simply if it is a works contract, and if it is a works contract means if it is a composite contract. There they simply say that if it is covered under the definition of works contract, that means if it is a composite contract involving both supply of material as well as execution of labor and services, then it would be a works contract. Whatever may be the dominant nature, that is not relevant here. So here the basic departure in the principle is, so far it was based on the dominant nature test, which no more is relevant now. Now what is only relevant is if it is a composite contract, any contract if it is composite in nature involving both supply of goods as well as labor and services, that is execution, both together. If it is a combined, if it is a composite one which I showed you earlier, in that case it has to be treated as a works contract, and if it is a works contract then the material portion only would be liable to VAT. That means the service portion there has to be a deduction on account of service. Because what was the issue? The issue was if it is a contract for sale, then the entire contract value would be liable to VAT, and if it is a works contract, then there would be some deductions on account of labor and services. So finally it was said that no, only it has to be treated as a works contract, and accordingly deductions for labor and services are to be allowed. So only the material portion which is arrived at finally, that would be liable to VAT. So this is the issue. But still, yes, there are fine lines, because the Supreme Court here in this case also time and again has said that it is a very delicate issue. It cannot be, there cannot be any straitjacket formula as to in what case it would be a sale or in what case it would be a works contract. Yes.
Sir, I have a question here. In a restaurant, when we buy the food, which consists of certain materials and prepared by labor in the kitchen,
Right.
who put the labor in the material?
I understood. Very pertinent question. But still, of course, that issue is very clear that you are buying food. Supply.
Why can't we put it in the work contract tax?
Now you see, works contract again it says the execution. So there you are, your order is not for execution of food, but you are simply saying that मेरे को इतना ये रोटी चाहिए या इतना curry चाहिए and whatever. But yes, still it is a pertinent issue. You can raise this issue that it could also be treated as a works contract. And in fact, maybe you can relate it to this position as I said that in respect of restaurant services as well, that now that service element is charged to service tax under the service tax law, and then there is already a dispute on that service element can, because Supreme Court way back in 1999 had said that in case of a restaurant it is by way of specific entry into the schedule in the constitution, and therefore it is a sale, and therefore even if there is a service element, because supply of food by way of service in a restaurant, that is included in that particular schedule. So they say the Supreme Court said in 1999 that since service supply of food by way of service is sale, therefore the service element is also included in the definition of sale, and therefore the entire value should be charged to VAT, and therefore no service element can be separated. Based on that judgment from Supreme Court, now that this Kerala High Court also said that only the VAT can be charged on the full value and service tax cannot be charged on the service element. There cannot be element of service. But Mumbai High Court on the other hand is taking a different view, saying that no, still there could be a service element. They are interpreting that same old judgment from Supreme Court 1999. They are saying that no, that judgment is not understood by the Kerala High Court properly, and that technical discussion was there. So they said that no service tax can be imposed. And even Chhattisgarh High Court has said that once service tax is imposed on the service element and that is accepted by the states, that means the states have to agree that there is a service element, and therefore there has to be some deduction on account of the service element, and only the material portion can be charged to VAT. So that issue is still there in respect of.
But that's not happening in West Bengal.
That is not happening in?
Yeah, West Bengal.
Right, because as I told you, Kerala High Court, Mumbai High Court, direct conflict. Then Chhattisgarh High Court, Uttarakhand High Court, Allahabad High Court, different views by different high courts. So this issue is not settled as of now. Until unless this issue is settled by Supreme Court, because they are the only authority to settle this issue. Once this issue, once there are different conflicting views from different high courts, like now we are in West Bengal. If you talk about West Bengal, we do not have a judgment from West Bengal, that is Calcutta High Court. Once that is not there, then which other high court law will be applicable? So two high courts have conflicting views. So in that case, none of them would be applicable directly. So you have to argue your own case. And therefore this issue, until unless it is settled by the Supreme Court, we have to suffer from this. And we are suffering. We are already landing up paying both VAT as well as service tax to the extent of 40% of the value of restaurant services. Yes.
Sir, I have a question over unregistered purchase. in case of actual and presumptive basis,
Right.
but when the purchase from unregistered dealer, I have to pay the purchase tax.
Not in all cases. That is, purchase tax is payable only in respect of those purchases which are not included in the value for the purpose of VAT. That means on which is the transfer of property in which is not been transferred. Suppose you are executing a construction of a building as a contractor. So cement, steel, bricks, RMC. You are purchasing and using for execution of works contract, property is transferred, on that you are paying output tax, so no purchase tax payable. But if suppose you are purchasing certain consumable which is used for execution, so on that property is not transferred, you are not paying VAT on that, so in that case purchase tax would be paid. So friends, these were the main issues I thought I should discuss relating to particular VAT on works contract.